Welcome back to Explain the Charts, your go-to channel for in-depth market analysis. Today, August 1st, 2025, all eyes are on Amazon, ticker Amazon, as its stock faces significant pressure following its latest earnings report. Despite Q2 earnings beating expectations on revenue, the market has reacted with a sharp sell-off, primarily due to what's being described as murky guidance and intensifying AI competition, particularly impacting its crucial cloud unit, AWS. Major news outlets confirm this immediate negative sentiment. Yahoo Finance, Investors Business Daily, and Business Insider all highlight Amazon's stock slide even after an earnings beat. Moreover, the broader market is feeling the squeeze, with the Dow falling on news of new Trump tariffs and a mixed jobs report for July, adding to the bearish climate. Now, let's turn our attention to the charts to see how this news is translating into price action. On the daily chart, we see that Amazon had been in a strong uptrend from March 2024 through February 2025, even hitting new 52-week highs around $242.52. However, since February, the price has entered a period of consolidation and a subtle downtrend, forming a channel. The July 31st daily candle, which closed at $234.11, already showed a negative change, reflecting the initial market reaction to the earnings release that occurred after the market close on July 30th and before the full trading day on July 31st. The current news of the stock falling further in pre-market on August 1st suggests continued downward momentum. Let's zoom into the 15-minute time frame for a clearer picture of the immediate reaction on July 31st, specifically during the trading day. Looking at the period around 1329 Universal Time coordinated on July 31st, we can observe a significant red candle, opening at $236.02 and plummeting to $232.52 in just 15 minutes, validating the news about the stock's sharp decline. This breakdown occurred on substantial volume, indicating strong selling pressure and confirming that the disappointing guidance and AI competition concerns are indeed impacting investor confidence directly. The subsequent candles continued to show selling, pushing the price down to around $218.60 by the end of the July 31st trading day on this granular time frame. Shifting to the 1-hour chart for the past few weeks leading up to this event, we can see the short-term resistance and support levels that were in play. Notice how the price had been fluctuating, mostly within the $225 to $230 range in mid-July. On July 30th, there was a noticeable spike upwards, reaching highs around $237.50, likely on anticipation or early optimism about the earnings beat, before the negative guidance details emerged. However, this rally was short-lived, as confirmed by the sharp drop we just saw on the 15-minute chart and the resulting lower close on the July 31st daily candle. The immediate support level to watch on the hourly chart is around the $225 level, which has acted as a bounce point multiple times in the past month. Now, let's consider the long-term outlook on the daily chart. Beyond the immediate earnings reaction, Amazon's Q1 2025 report from March 31, 2025, showed a substantial 94.73% increase in net income year-over-year, which is fundamentally bullish. However, the negative free cash flow of $8.00 billion is a significant concern that could weigh on long-term investor sentiment if it persists. Interestingly, despite the recent pullback, several analysts had recently raised their price targets, some as high as $272, signaling underlying bullish sentiment from Wall Street on Amazon's future potential. This conflicting view between short-term market reaction and long-term analyst targets is what makes Amazon so fascinating right now. Let's look at another interesting period on the daily chart, back in early April 2025. Specifically, from April 3rd to April 9th, observe the wild price swings, including a significant drop followed by a sharp rebound. This period of heightened volatility, often seen around earnings reports or major news events, demonstrates how quickly price can move and recover in this stock. The ability to identify these swift reversals can be crucial for short-term trading decisions. So, what are the reasons to be bullish or bearish on Amazon right now? On the bearish side, the primary drivers are the disappointing guidance for future quarters and the perceived weakness in the cloud unit amid rising AI competition. The recent heavy selling volume on the July 31st candles across all time frames underscores this negative sentiment. Furthermore, the ongoing trade tariffs and broader economic uncertainties could continue to drag down the entire tech sector. Conversely, reasons to be bullish include Amazon's continued earnings beat on revenue, highlighting its operational strength despite guidance concerns. Its mega-capitalization status provides inherent stability, and the long-term price targets from respected analysts suggest confidence in its ability to innovate and grow out of current challenges. The previous strong bounces from support levels also suggest persistent buying interest. Looking ahead, short-term, Amazon is likely to test the $225 support level. A sustained break below $225 would open the door to further downside, with the next significant support around $220, a level that held firm in late 2024. On the upside, immediate resistance is found around $230 to $232, which was a point of breakdown after the recent earnings news. For a recovery, Amazon needs to decisively reclaim and hold above the $235 to $236 level, which was yesterday's high point before the significant drop. In the midterm, if the market absorbs the negative guidance and no further adverse news emerges regarding AWS or AI strategy, we could see a slow grind back towards the $240 to $242 52-week high. This would be reinforced by positive commentary from Amazon on their AI initiatives or stronger performance from other business segments. Long-term, a return to the analyst price targets of $260 to $272 is certainly plausible, but this hinges on consistent improvement in free cash flow and a clear, successful strategy to address AI competition and cloud growth concerns. Watch closely for any news regarding Amazon's strategic pivots or new developments in their AI and cloud offerings, as these will be critical catalysts. That wraps up our in-depth analysis of Amazon. Remember to always do your own research and consider multiple factors before making trading decisions. Be sure to like, subscribe, and hit the notification bell for more insights from Explain the Charts.